Hey, welcome back to Harvesting Income. Today I'm going to talk about an interesting fund, which is the Gold Yield ETF. This is about investing in gold and also investing in a fund which writes covered call on the gold exchange traded fund. So this is from Global X, and this is going to generate income and also give you exposure to gold and exposure to the capital appreciation of gold. So you get a mix of both the capital appreciation plus a mix of dividends or cash flows. Let's see how it works, and let's see what are the pros and cons and if it's something that is suitable for you. This is from Global X, and the fund name is Global X Gold Yield ETF. Ticker symbol is HGY. This is relevant for Canadian investors. It's listed on the TSX. So let's look at the features of the fund. Like the price is about $13.34. Uh, it's a fairly interesting concept that they are investing directly in the metal gold. And the fund is pretty old. Like it was launched back in 2010, December 2010, and they have net assets of about 120 million. So it has a fair amount of history. The expense ratio is 89 basis points, and they also have a trading expense ratio of 0.09. So it's about 9.98% fees or expense that you're paying. So it's a bit higher, and yeah, currency is in Canadian dollars. Okay, let me look at the basic features of the fund. So the fund actually provides exposure to the price of the bullion or gold, and that's a hedge against economic uncertainty, a hedge against the dollar, and so on. And also it kind of protects you against the market fluctuations or risks, or gives you an option to hedge. And here you have the potential to generate income through covered call writing, which produces higher yields in periods of volatility. Like when there is a high volatility, there's a high chance of premiums getting more richer, and you can anticipate to get a higher amount of yield. And this is designed to provide monthly income. Okay, so that's how it works. It's basically exposure to gold, and using the covered call strategy, you're going to make income. And of course, the covered call strategy also reduces the volatility. Okay, so let's look at the dividends and the performance of the fund. Okay, when I look at the annual performance, like this is the price performance, not the dividends. So it's here it shows that in the last 1 year, gold has delivered about this ETF has delivered about 33%, and of course that is also due to the higher prices of gold. The prices went up in the last 1 year, and over the last 3 years also it is pretty attractive, 16.89%, and over a 5 year period it's around 9%, and so on and so forth. Like if you look at the recent time, there's been a high appreciation in the price of gold. And if you look at the year to year performance, you've seen 2024 has been a very good year, around 21% increase on that year, and the 2023 almost like 9.6%. In 2022 and 2021 there was a decline. So this is how it's going to be. It's going to be pretty much fluctuating all over the place. And if you look at the distributions, like, this is where it's attractive. Like if you're worried about the volatility and fluctuations, but you still want a way to invest in gold, you have these distributions which can give you that stability. Like in 2025, first 6 months, you're getting about 6 cents a month. And if I look at the filter and go to 2024, I see that in 2024 calendar year, the dividends have been 5 cents a month. In 2023, it's been similar. So if I do a rough calculation, like, to know how much dividend yield I'm making, I'm going to do it here just to show you, just to give you a rough idea. So if I do the math here, like 6 cents a month, comes to about 36 cents in 2025. And in 2024, 6 months, the later part of the year, which is like July to December, the second half of the year, this is about 30 cents, 5 cents a month. So 6 months, it's 30 cents. And if you look at 2025, 6 cents a month. So 6 months is 36 cents. So 36 cents divided by $13. If I do the math, it comes to about 0.36 divided by $13. Roughly, it comes to 0.36 plus 0.30, 66 cents divided by $13. Roughly, it's about 5%. So that's the number you see here. They have quoted on the top. Let me go all the way here to the top. It's a 5.4% annual distribution yield. And of course, this yield can fluctuate. It can vary, generally speaking, but the fund has actually looked at the numbers over the years, and they determine like how much they want to pay every month to show that kind of consistency, so investors can plan their cash flows. So if you look at the previous years like 2022, there has been a fluctuation in the amount of dividends, but at some point they have analyzed the ups and downs, and they have decided that they will smoothen out the payments and gradually provide the increase or maintain that distribution. Okay, so coming back to the point, like what are the pros and cons of this ETF? The pros and cons of this ETF would actually depend on the pros and cons of investing in gold. Gold can be a great hedge, but in some periods when the markets are going through a bull rally or when they are doing well, the gold metal can underperform. That's one disadvantage. The advantage is when there is a huge fluctuation in the market, gold provides you that stability. But investing in physical gold or the gold ETF is not going to give you income stream. And this fund aims to give you that income stream that you don't get from the regular gold ETF. Okay, what does this fund actually hold? That's another thing. The fund holds actually SPDR Gold Mines Trust, GLDM, which is another exchange traded fund from SPDR. Like I have that open here. SPDR Gold Mini Shares. This is what the fund holds, and the fund is actually holding the other fund, which has an expense ratio of 0.10. So there's an extra layer of fees that you're paying. So that extra fees is a kind of a disadvantage because you're already paying 0.98 plus another 10 basis points you're paying fee, so it's about 1%, 1.08%. That's what you're paying, and that can be a deterrent, but at the same time you remember the fact that you're also paying for the trading and covered call options, and you're getting that extra income which gives you a smooth exposure to the gold. And getting that smooth income every month actually helps you maintain your long term exposure, and you can always sell when you want to sell for booking profits, or you want to diversify or reallocate your portfolio, you can always do that. So that's the flexibility you have in this fund. So just giving you the pros and cons. Here, I would like to make a point here. Um, Looking at my own views, this could vary from person to person. Like if you are someone who is looking for a conservative way to invest in gold, you like the metal, you should consider this fund. However, for me personally, I am not a great fan of gold. I would like to invest in gold if it provides double digit returns. So I have chosen a different fund, and the name of that fund is GLCC. So that fund is providing better alternative compared to the HGY. I can try to see if I can find the information here. um, Global X GLCC. So this fund is what I like. Just wanted to give you a quick overview. This fund I like because this provides you exposure to the gold producers, not the gold metal itself. So it provides a higher yield. Right now it is 8.5%, but sometimes it can be 9%, 10%. It has the potential to give you double digit yields. Plus you also have the capital appreciation from the underlying holdings. So underlying holdings are all these major companies like Kinross, Barrick Gold, and so on, and Pan American Silver, and so on. All these are big names in the gold production field. So I like this fund GLCC more than the HGY. This is just my personal preference. Both funds have different goals, different objectives, and so you can choose what fits you. So now I'll go back to the main fund here. Um, you know, the HGY. When I look at this fund, there's another extra information that they provide. Like if you are looking at the performance, you can look at the extra information they're providing here on the portfolio investment metrics. So they are telling you how much of calls were written by the month end, around 32.8% were written by month end, and the calls were out of the money by 1.54%, and the percentage of options written by month end is about 77.4, and standard deviation. So you can also look at these statistics every month, or whenever it changes, you can take a look here. So overall, this fund is a good option for someone looking for yield from the gold metal itself. So I hope you like this video, and if you have any comments, any points that you want me to share in the future video, or if you have invested in this fund and you want to share your thoughts, please feel free to drop in your comments or questions below. I hope you like this video, and looking forward to hear from you. Happy investing.